And what I wanted to talk to you about today was fixed rates, and not specifically the interest rates or what you can get in any given market, whether it be 1, 2, 3, 5, 7 or 10-year terms, but more the repercussions or the impact of doing that. So let me explain to you first, what is a fixed rate? A fixed rate gives you a guaranteed repayment amount, which is fantastic. You've got your interest rate, whether it be 3, 4, 5, 6, 7%, whatever it is that you take. You've then got that rate certainty, and that's why people generally take a fixed rate. But then after that, it doesn't allow you very much flexibility at all. You are locked into that contract. Now, for investors and for people that their circumstances are changing, taking a fixed rate can really benefit them. But if you're not sure, please don't rush in and do it. If you're thinking of selling a property, please don't rush in and do it. If you're thinking your circumstances might change, please don't rush in and do it without seeking some advice. Because I've seen many times where it's cost people hundreds and thousands even of dollars, and I've seen that up to tens of thousands of dollars, where it's cost a client to break the fixed rate. Now, how do the banks calculate these? Well, when you take a fixed rate term, let's say it's a 3-year term, you are guaranteeing and they're locking that money away from that term. So there actually is a cost to the bank, and they pass that on if you break it. So if you're fixed in today for 3 years at 4.5% or 5%, whatever the rate is, and in 18 months' time you choose to break that rate, there's a cost to the bank. They pass that on to the borrower. You're the one that's broken the contract. You're the one that's changed those terms. So before you rush in and fix, just think, what are your circumstances? Why are you fixing? Now, if you're fixing and it's a longer term thing, it's with an investor and you're balancing off some of your portfolio, fine. Let's get some advice. Let's talk about it. Let's look at the options. But for home buyers who really rush in and think, oh, I need the fixed rate, I want to be certain what I'm getting, just please seek some advice, because if your circumstances change, you want to buy, sell, upgrade, and you want to break that contract, I've seen it cost clients lots and lots of money who didn't seek advice in the first place. So whenever you're talking fixed rates, the things to consider are the rate guarantee, but then we must offset that with what does it mean, and we've got to offset that against the term we're taking, a change in our circumstances, better rates, often trying to then chase the market and catch up to if we're fixed too high, things like that. Please consider all the options and don't rush in and fix until you've got the right advice, and we're doing it with a balanced approach. So I hope that gives you a bit of an insight into fixed rates and the pros and cons of doing it. Look, there are many opportunities, and there's many clients of ours that fix rates consistently, especially those bigger investors. There's home buyers that do it. They split off a portion of their home loan into a part fixed and a part variable. Very rarely would we put a whole home loan into all fixed, because it just reduces your flexibility and your ability to make extra repayments, to have a redraw account and things like that. Okay, so just before you fix, just consider all the options, consider all the outcomes, and seek advice. So I hope that helps explain a little bit about what the fixed rates are. The real terms are, and where the big money comes in, is if you're breaking a fixed rate in the short term. So if you've taken it for 5 years and you're breaking it after 1, there will be a massive cost. It won't matter. And then the other thing that they calculate is the differential in the rates of the given day. That's how they calculate it, but really the bank, what it's trying to do is recover its cost because you're breaking the contract. So there's an insight into how and why you get charged penalties for fixing a rate. Just make sure, I guess the overriding advice is, just make sure before you rush out and fix, just do it with the right advice. Make sure you're doing it for the right reasons, not just chasing rate, and with that you should all be safe.